Most investors think the AI trade is already crowded, but what if the real value is hiding inside companies everyone thinks they already understand? In this video, we're breaking down 3 hidden AI value plays you're overlooking and why they may still have significant upside even after the massive run in AI stocks. These are dominant, cash-generating businesses with deep moats, massive distribution, and the ability to compound for years as AI becomes embedded into every layer of the global economy. Let's start with the first one. Microsoft. Ticker symbol MSFT. Now on the surface, Microsoft does not feel like a hidden play. It is one of the largest companies in the world. Everyone knows it, everyone owns it, and that is exactly why most investors are missing what is actually happening here. Because Microsoft is quietly transforming itself into one of the most powerful AI monetization machines on the planet, not just building AI, but embedding it into everything. Think about Microsoft's position. It controls one of the most widely used operating systems in the world. It owns one of the largest enterprise software ecosystems. It operates a massive cloud platform that businesses rely on every day. Now layer AI into that. This is not a company trying to sell a single AI product. This is a company integrating AI across an entire ecosystem. And that changes the economics completely. Because instead of selling AI as a standalone offering, Microsoft can bundle it into products that customers are already using. That creates frictionless adoption. It also creates pricing power. When you add AI capabilities to tools that businesses depend on, you are not just offering an upgrade. You are offering productivity gains, and businesses are willing to pay for productivity. That is where the real value comes from. Now let's talk about the cloud. Microsoft's cloud platform is one of the most important pieces of this story. As AI workloads increase, companies need more computing power, more storage, and more infrastructure. That demand flows directly into the cloud, and Microsoft is positioned to capture it. The company has been seeing strong growth in its cloud segment, driven in part by increasing demand for AI services. This is not just incremental growth, this is acceleration, because AI workloads are significantly more resource-intensive than traditional applications. That means higher spending per customer, and higher spending leads to higher revenue. Now here is where things get interesting from a valuation perspective. Despite its size, Microsoft is still growing at a pace that many smaller companies would envy. Revenue continues to expand, margins remain strong, and free cash flow generation is significant. This is not a speculative business, this is a cash machine, and that cash allows Microsoft to invest aggressively in AI while still returning capital to shareholders. That creates a powerful combination of growth and stability. Another key advantage is distribution. Microsoft does not need to convince customers to try its products. They are already using them. That gives the company a massive advantage when it comes to rolling out new AI features. Adoption can happen quickly and at scale. Now think about long-term relevance. AI is not going to replace software, it is going to enhance it, and the companies that own the software layer are in the best position to capture that value. Microsoft owns that layer. From productivity tools to cloud infrastructure, it sits at the center of how businesses operate. That makes it incredibly difficult to displace, and incredibly valuable over time. Now let's talk about what makes this a value play, because that is the key point. Even after its run, Microsoft is still trading at a level that reflects strong growth, but not necessarily the full potential of AI integration across its ecosystem. Most investors are still thinking about Microsoft as a traditional software company with a cloud business. But what it is becoming is something different. It is becoming an AI-powered platform. And platform businesses tend to compound in ways that are difficult to fully appreciate in the early stages, because every new feature, every new integration, increases the value of the entire system. That creates a flywheel. More users lead to more data leads to better AI leads to more usage, and the cycle continues. Now consider the scale. When Microsoft rolls out an AI feature, it is not reaching thousands of users, it is reaching millions. That kind of scale amplifies impact, and impact drives revenue. Now let's address risk, because no investment is without it. The main risk here is execution. Integrating AI across such a large ecosystem is complex. There are technical challenges, cost considerations, and competitive pressures, but Microsoft has a track record of executing at scale. And that matters, because in a market like AI, execution separates winners from everyone else. Now step back and think about what we have here. A company with massive distribution, strong cash flow, a dominant position in enterprise software, and a rapidly growing cloud business, all being enhanced by AI. That is not just a growth story, that is a compounding machine, and yet many investors are still treating it like a mature tech company. That disconnect is where the opportunity lies. If this resonates with you, you're exactly who this channel is for. Please hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Now let's move to the second company, because while the first one is monetizing AI across an ecosystem, this next one is powering the entire system at its core. NVIDIA, ticker symbol NVDA. Most people think they understand NVIDIA. They see the headlines, they see the explosive growth, they assume the opportunity has already passed, but that assumption is exactly where the misunderstanding begins. Because NVIDIA is not just riding the AI wave, it is defining it. To understand why NVIDIA is still a value play, you have to look at what the company actually controls. At the most fundamental level, AI requires compute, massive amounts of compute, training models, running inference, processing data at scale. None of this happens without specialized hardware that can handle parallel workloads efficiently. That is NVIDIA's domain. Its GPUs are not just fast. They are designed specifically for the type of processing AI demands, and that specialization creates a massive advantage. Now here is where most investors stop. They think NVIDIA is just a hardware company, but that is not what makes it powerful. What makes NVIDIA dominant is the ecosystem built around that hardware. The company has spent years developing software tools, libraries, and frameworks that integrate tightly with its chips. This creates a platform, and platforms are where the real value is created. Because once developers build on a platform, they tend to stay. Switching becomes expensive, not just financially, but operationally. You are not just replacing hardware, you are rebuilding workflows, retraining teams, and rewriting code. That creates lock-in, and lock-in creates pricing power. Now let's talk about demand. NVIDIA has been experiencing unprecedented demand for its AI products, particularly in data centers. Companies are investing heavily in AI infrastructure, and a significant portion of that spending is going directly toward high-performance computing. This is driving rapid revenue growth. The company has seen its data center segment become the dominant contributor to its overall revenue, reflecting the shift toward AI-driven demand. And this is not a short-term spike. This is a structural change. AI is moving from experimentation to deployment, from niche use cases to widespread adoption. And as that happens, the need for compute increases dramatically. NVIDIA is positioned right at the center of that demand. Now let's talk about margins, because this is where the story becomes even more compelling. When demand exceeds supply and alternatives are limited, companies gain pricing power. NVIDIA is in that position. Its products are not just preferred, they are essential, and when something becomes essential, customers are willing to pay a premium. That drives margins higher, and higher margins lead to stronger earnings growth. This is one of the reasons why NVIDIA's financial performance has been so strong. Revenue is growing rapidly, profitability is expanding, and free cash flow generation is increasing. This is not just growth. This is high-quality growth. Now let's talk about long-term relevance. AI is still in its early stages. We are in the first phase of adoption. As models become more advanced and applications expand, the demand for compute will continue to rise. And that demand will not be linear, it will accelerate. Because each new generation of AI requires more data, more processing power, and more infrastructure. NVIDIA benefits from all of that. But here is the key point. NVIDIA is not standing still. The company continues to innovate, releasing new generations of hardware that improve performance and efficiency. At the same time, it is expanding its software ecosystem, creating additional layers of value. This is not a one-dimensional business. It is a multi-layered platform. Hardware drives adoption, software reinforces it, and together they create a compounding effect. Now let's address the valuation question, because this is where most investors hesitate. They look at the stock and assume it is expensive. But valuation is not just about where a stock is today. It is about where the business is going. If NVIDIA continues to grow into its opportunity, the current valuation may not fully reflect its long-term potential, because the market is still trying to quantify something that is evolving rapidly. And in situations like that, traditional metrics can fall short. Now let's talk about risk. The biggest risk for NVIDIA is competition and execution. As the AI market grows, more players will try to enter the space. At the same time, maintaining technological leadership requires constant innovation, but NVIDIA has shown a consistent ability to stay ahead. And in a fast-moving market, that track record matters. Now step back and think about what we have here. A company that controls the compute layer of AI, a platform that developers rely on, strong demand, expanding margins, and continuous innovation. This is not just a growth story, this is an infrastructure story, and infrastructure tends to have durability. Now connect this to what we discussed earlier. Microsoft is monetizing AI at the application level. NVIDIA is enabling it at the compute level. Both are essential, but they operate in different layers. And that is what makes this opportunity so powerful. Because you are not betting on a single outcome. You are investing across the stack. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's move to the final company, and this is where most investors completely miss the plot, because while everyone is focused on compute and software, they overlook the one component that determines how efficiently everything actually runs: memory. Micron Technology, ticker symbol MU. If AI is the engine, memory is the fuel system. Without it, nothing moves. And more importantly, without the right kind of memory, everything slows down. To understand Micron's importance, you need to understand how AI workloads actually function. Training large AI models requires processing enormous datasets. These datasets need to be stored, accessed, and transferred at extremely high speeds. This is not optional, it is fundamental to performance. And that is where memory becomes critical. Micron is one of the leading producers of DRAM and NAND memory, but in the context of AI, not all memory is equal. AI systems require high bandwidth, low latency memory that can keep up with the speed of advanced processors. This is where the industry is shifting, and Micron is positioned right in the middle of that shift. The company is investing heavily in next-generation memory solutions designed specifically for AI workloads. One of the most important of these is high bandwidth memory. This type of memory allows data to move faster between processors and storage, improving overall system performance, and demand for it is exploding. This is not a slow transition. It is a rapid shift driven by the needs of AI infrastructure. Now here is where things get interesting from an investment perspective. For years, memory companies were viewed as cyclical. Prices would rise and fall based on supply and demand, leading to volatile earnings. But AI is starting to change that, because AI demand is not cyclical, it is structural. This is not about replacing old devices or upgrading consumer products. This is about building entirely new infrastructure, and that infrastructure requires massive amounts of memory. That creates a different demand profile, more consistent, more predictable, and potentially more profitable. Micron is already seeing the effects of this shift. The company has been guiding towards strong demand for its AI-related memory products, particularly high-bandwidth memory. And as more AI systems are deployed, that demand is expected to grow. Now let's talk about pricing. When demand exceeds supply, prices go up. That is basic economics. But in the memory industry, price increases can have a significant impact on margins. Because once fixed costs are covered, additional revenue flows through at a higher margin. That creates operating leverage, and operating leverage drives earnings growth. This is one of the reasons why memory companies can experience rapid increases in profitability during upcycles. But this time, the cycle is being supported by a structural trend: AI. Now let's talk about supply. Memory is a capital-intensive business. Building new capacity requires significant investment and time. You cannot simply flip a switch and increase production. That creates constraints. And constraints support pricing. Micron benefits from this dynamic, because as demand grows, supply cannot immediately catch up. Now from a competitive standpoint, this is not a crowded market. There are only a handful of companies capable of producing advanced memory at scale. That creates a natural barrier to entry. And in a high-demand environment, that barrier becomes even more valuable. Now let's talk about financials. Micron has historically gone through cycles, but what we are seeing now is a shift in the underlying drivers of growth. AI demand is adding a new layer on top of traditional memory demand. That changes the trajectory. Instead of purely cyclical swings, you get a structural upward trend with cyclical fluctuations around it. That is a very different investment profile. Now think about where this fits in the AI ecosystem. Processors get the attention, software gets the headlines, but memory enables performance. Without enough high-speed memory, even the most advanced processors cannot operate efficiently. That makes Micron essential, and yet, it is often overlooked. That is what creates the opportunity. Because as the market begins to fully appreciate the role of memory in AI, companies like Micron could see a significant re-rating, not as cyclical plays, but as core infrastructure providers. Now step back and connect everything we have covered. You have Microsoft integrating AI into software and monetizing it at scale. You have NVIDIA powering the compute layer that makes AI possible. And now you have Micron enabling the data movement that keeps everything running efficiently. These are three different layers, but they are all essential. And that is the key insight. The real AI winners are not just the companies building applications. They are the companies building the infrastructure. That is where the durable advantages are. That is where long-term compounding happens. And that is where investors can still find value. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/StocksGalore and become part of our growing community of smart investors. Link is in the description. Now here is a question for you. Which part of the AI stack do you think has the strongest long-term advantage? Software integration, compute power, or memory infrastructure? Let me know your thoughts in the comments. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.